Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. Sanae Takaichi becomes Japan's first female prime minister and will now look to appoint a cabinet later today. President Trump predicts a trade deal with China is coming, but agrees a rare earths access deal with Australia. Asian stocks hit a record, extending a global rally as trade tensions ease. Despite this, gold holding near record highs.
In the meantime, quick check on these markets. When you look at the futures picture, unchanged on Eurostoxx 50, you are starting to see a slight downward tilt when you look across the Atlantic. That is not stopping the FTSE 100. That's the outperformer this morning, higher by 0.2%. We'll take our wins where we get it. Of course, as Anna was just saying, the focus on Japan and what the Takaichi trade actually looks like right now. It means weakness in the yen, 151.53 on that currency pair. Of course, also one eye on what's going on in U.S. assets. The 10-year yield sub 4%, 3.98 on that maturity. The countdown to the opening trade starts right now.
Tuesday morning, good morning. So we filled the gap that we saw created back on the 10th in US futures. That's significant. It's taken a while to fill that gap. Maybe buy the dip, not quite so big a trade over the last few days. The other thing I'll highlight this morning is you're seeing a massive move lower. Not a massive move. You're seeing a significant move lower in Bitcoin this morning. Is that a harbinger maybe of a more risk-off narrative? Kriti was pointing maybe things starting to turn a little bit more edgy in the futures trade. Keep an eye on that as we work our way towards the opening trade here in Europe in 58 minutes. The story out in Asia, though, is a much more positive one. We are seeing Asian equities at records. Japan, very much part of the picture.
Yeah, Japan certainly part of the picture. We'll come to the China part of the picture in a moment. But Japan to start with. Sanae Takaichi, then the first female prime minister of Japan. So for that reason, it will be remarked upon globally for no economic reasons. But here with the economic focus, we're watching what happens to stocks, to yen, to bonds. And at the moment, things have been, markets have not been thrown off course, particularly by this. So the yen weakness, that was a trend in place since she had looked like she was going to get this position. That continues to be the case. And in fact, the yen weakness we're seeing today might have more to do with the BOJ and the impact on the BOJ and them not being in a hurry to hike rates. Stocks are still positive, although they've lost a little bit of their momentum. Maybe something about better to travel than arrive or some old adage is relevant. And of course, we watch the long end of bond markets because of the plans around fiscal spending she has. It's been lots talked about that she likes Urbanomics, and that was a very different time. That's when we had no inflation. Now we have inflation in Japan, so whether those policies will be suitable will be something that we continue to talk about.
Well, those policies and whether they come in tandem or in contrast to what you're hearing from the BOJ. If BOJ is trying to curb inflation, then I'm not sure policies like taking back fuel taxes, for example, rollbacks necessarily helps that inflationary cost. So that's something we're probably going to digest throughout the show. I also think it's fascinating that the narrative around her has shifted because a couple of days ago, the question in the Japanese government was, can any administration survive given just how fractured the coalitions are? And now it seems like she's being kind of lauded for starting to show some stability when it comes to the Japanese coalition. The question, of course, is, does it stay?
Japanese equities have had a great run, amazing run, really solid run. Is that going to be continuing under this new administration? Is it going to affect the BOJ? I think those are the two key takeaways that I think markets are watching for this morning. Let's talk about what's happened with Australia overnight. Well, not overnight, depends if you're in the United States. It's a different picture. We saw the meeting yesterday between Anthony Albanese, the Prime Minister of Australia, and Donald Trump in the White House. Some meetings in the White House go well, some don't. This one went quite well. You saw the Australians getting a big tick in the box for AUKUS, which is the big submarine program that is being pushed on the defence side. But you also saw deals done on rare earths. The US definitely wants rare earth deals. And it's interesting that you're seeing the Import-Export Bank of the United States, the Export-Import Bank, I never know which way around that goes.
I think
it should be shut down, though, right now. But apparently it's involved in this. And it's potentially taking stakes or helping finance some of these projects in Australia. So that link gets closer and closer. So the defence side gets closer. The rare earth connection gets a little closer as well. You've seen some really big moves in some of these stocks over the last 24, 48 hours. We're fading that a little bit this morning, but wow, what a move.
Yeah, and the wider mood music, the commentary coming from President Trump around China and his expectations around his meeting, which comes in just next week, isn't it, between Xi and Trump. The mood music is a little better. He's downplaying prospects of a clash over Taiwan, even though he wants to talk about that. He wants that on the agenda. He says that China has been respectful to the United States. He said that the talks will be, well, there is a chance of getting a fair and great trade deal with China. So it's a contrast to what we saw on the, 10th of October, where stocks dropped on his really seemingly quite angry and urgent commitment to increase tariffs on China. And so we look ahead to that meeting between the two presidents, mindful of the fact that on November 10th, the existing trade truce expires if there's no sort of push to renew it.
And there's starting to be some commentary around whether Taiwan is going to be a part of those discussions, something that's actively been avoided in those discussions, not only in this administration, under the Biden administration, certainly under the first Trump administration as well. It's fascinating, though, when you talk about the sensitivity of these markets. What are they trading on? Is it still coming back to inflation, the data, the fourth week of a government shutdown, or are we starting to look at the trade over in Australia, for example, trade over in China, or just simply the fact that it is a all zero-sum or a game when it comes to whether or not these two global superpowers are going to come to some sort of agreement? Is that all you need to be risk-on in this market?
Can I park all of that and just deal with earnings right now?
Sure.
Because that's going to be the big story, I think, for the next few days. It's going to be interesting to see what the offset looks like between these two stories. If you get a positive story on earnings, we're going to get some big names reporting later on. Is that going to be enough to offset geopolitical concerns and other issues?
Val was pointing out to us earlier, we might get some information on some of these geopolitical concerns or financial services concerns from the earnings stories. So, of course, with banking, we continue to watch what's going on in credit markets. But also with tech, we continue to get their perspective on what's going on with rare earths and what kind of threat China, what kind of cards China really does have, despite any deal that's been done with Australia. In terms of focus on the trade conversation, I thought it was interesting that I was reading on the Markets Live blog yesterday that the VIX has a kink in it around the end of this month, which is exactly where we see Trump and Xi coming together, which I suppose does make sense. Even if we've parked a lot of those trade tensions and trade headlines, if we do see the two largest economies in the world, if their truce collapses, if they fail to come to any kind of agreement on trade, and we're back to talking about tariffs of over 100%, then that could get messy.
I gotta say, our markets team is on fire. Not to kind of self-congratulate the Bloomberg team, but in addition to the VIX King, they also talked about the Japanese Widowmaker, for example. So there are some very nuanced trades here that are happening in this market to be able to navigate the politics.
You don't often see the interplay between ice cream and a government shutdown.
No, have we got that this morning?
Oh, please explain.
That's made my Tuesday.
OK, Unilever revises Magnum demerger timetable and US government shutdown.
Wow.
Just for a giggle. OK, let's talk about what we've got coming up on the show. Peter Kinsella, Union Bancaire Privé Investment Services UK head, joining us in just a moment, as will be Naomi Fink, Amova Asset Management's Chief Global Strategist over there. Louise Dudley's going to join us in the second hour, Federated Hermes Global Equities Portfolio Manager, and Eléonore Crespo, Pigment co-founder and co-CEO. It's Tech Week this week, and Tom is going to be talking to her a little bit later on.
Lots of great,
in the next hour.
Yeah, lots of great conversations at that summit, but of course in our show as well. Let's talk about some of the data, some of the commentary that's going to be hitting the wire at 8 a.m. at time UK. We are going to get ECB Chief Economist Philip Lane. He is going to be speaking, so we'll see if that tends to move the market just under an hour's time. We are also, before the U.S. opening bell, getting General Motors earnings. So again, speaking of that earnings picture, it's not just here in Europe. We're going to get plenty in the United States as well. Netflix, Texas Instruments, among others. 12 p.m. UK time, ECB President Christine Lagarde also going to be hitting the wire, and ECB's Noggle as well. Lots going on there. It feels like ECB and earnings is where today's week ahead lies.
I've been diving into the link between US shutdowns and ice cream, and it says in the statement that this is to do with the SEC. And this was something we talked about with the boom in IPOs and, well, I mean, boom, the threat that IPOs boom back, that could be at risk because of what's going on with the shutdown. And it is that link that the management over at Unilever are referencing, saying that they can't get the registration documents, essentially, for the new business as a result of this. But should we talk about some of the earnings stories we have out today? Netflix, Texas Instruments.
Absolutely. I mean, for me, I just want to know what's coming up on Netflix. That's what I'm keeping my eye on.
Apparently, there was another Squid Game that passed me by, but there was another one, and that
Demon Slayers was the big thing, wasn't it?
Yes, I've heard that this is the thing that the youth is all excited about. Apparently, they've gotten their parents on board.
It's got Guy written all over it.
I mean, you knew about it more than I did.
Well, my children have watched it and are aware of it. Therefore, I am aware of it by extension. I don't know. It looks like they're going to see fairly solid numbers. I don't know. It's how. In terms of the order of priorities, where does Netflix come in your kind of order of priorities? I think if we're in a K-shaped recovery and you're starting to see a squeeze at the bottom, does Netflix get hit by that? I don't know.
Yeah. Do people change the type of Netflix product they have because there's these different models? Exactly. Yeah. So what do we see on subscribers? Dollars per user. how many hours watched. I mean, maybe hours watched increases if people spend less on other stuff.
Well, the currency conversation is going to be crucial there because in the last couple earnings reports, all been about not their subscribers in the States, but subscribers abroad. And that's going to be something that shows up in their bottom line. If you have a weaker dollar, that might actually be a plus for them. We have plenty of conversation ahead on the tech investments, the tech earnings story, as well as the future of Europe's sovereignty at the Bloomberg Tech Summit in London. Among the industry leaders, we'll be hearing from executives from Pigment, CoreWeave, Helsing, Pandora Bots, and Upwind. You can follow it all on your terminal on TLIV Go. Exciting.
Very. What else do you need to know this morning? Amazon Web Services, the world's largest cloud provider, says operations are now back to normal after yesterday's widespread outage. The episode disrupted hundreds of websites, apps including the likes of Venmo, Robinhood and Apple TV. The outage was caused by a database network issue. Sounds really boring, but had pretty big effects. A meeting between Russia's Foreign Minister Sergei Lavrov and his US counterpart Marco Rubio has been put on hold after the pair spoke on the phone on Monday, according to CNN. It is unclear whether this will impact the anticipated meeting between Presidents Trump and Putin next week as part of efforts to end the war in Ukraine. Meanwhile, European leaders are increasing their support for Kyiv. EU officials have said the world must pressure President Putin to negotiate.
Ukraine has been ready for unconditional ceasefire already since February, but Russia has no genuine interest in peace. We all support President Trump's efforts to end the war, but Putin will only negotiate seriously if he thinks he's losing. This week, we aim to adopt a major new sanctions package on Russia.
Turning to the UK, the Chancellor, Rachel Reeves, is set to announce that the government is slashing red tape for businesses at an investment summit that will take place later today. Reeves will apparently highlight that simpler corporate reporting rules for 100,000 qualifying businesses could lead to £6 billion of annual savings for the firms. It's part of efforts here in the UK to boost economic growth ahead of what is likely to be a difficult budget next month. And the data may be pointing in that direction as well this morning.
Yeah, not making it any easier. So the UK budget deficit for September, £20.2 billion. That on its own might not mean much. But if you put that in with what we've heard so far this year, April to September, the budget deficit, £99.8 billion. And crucially, that is more than £7 billion above the OBR's forecast. So does that make the maths a little more tricky for the Chancellor? Yes, is the answer to that question. Coming up on this programme, we will keep an eye on BNP Paribas at the open after shares plummeted yesterday over a verdict linking it to human rights abuses in Sudan. BNP pushing back vehemently against the verdict. We will certainly keep an eye on that stock and get further updates on this intriguing story. Plus, L'Oreal reports sales today following yesterday's announcement to acquire Kering's beauty arm. We will get more details on the deal and the company's broader performance. But up next, equities get a lift from some positive trade news, but gold is still higher. So we'll talk about markets. If you have questions, you want to get involved in any of these conversations, IB plus BBTV Go is the function on the Bloomberg terminal. This is Bloomberg.
I expect we'll probably work out a very fair deal with President Xi of China. So most of you will be with us. It's going to be very exciting. And I think we're going to work out something that's good for both countries.
President Trump there, optimistic then on the potential for a deal with China on trade. Valerie Teitel is here. She's been looking at how the markets have been receiving those latest comments from the president. Val.
Well, we definitely bought the risk-on theme yesterday. Equity markets really powering ahead. Not a lot of new catalysts, just the fact that some of these worries are receding. Yes, we had those updates from Trump on the China situation, but we also had these U.S. regional banks bouncing back for a second day in a row. Zion's Western Alliance really erasing their drop from last Thursday. It's helped the S&P futures in the last 8 sessions really make up that drop from 2 Fridays ago. Yet I remind you, when Trump first threatened the additional 100% tariffs on China, we're now essentially back to flat, just down 0.2%. Yesterday's gains really helping. A lot of that was driven, though, by tech. The Mag 7s accounted for around 50% of the equity market gains yesterday. 25% alone came from Apple surge, jumping around 4% in yesterday's session on the back of iPhone optimism. So it really was tech and the fact that we have this regional bank issue in the rearview mirror really helping out. Momentum trades are back, except when it comes to cryptocurrency. Bitcoin falling this morning, down over 3%, down just 3%, shall I say. And it is still substantially down from where we were on October 10th when that Trump tweet was released. We're down around 11.5% on the cryptocurrency. So still feels like momentum is back, but crypto is not necessarily feeling the excitement. However, there has just been a general drop in implied volatility. This is really helping those market participants deploy capital, buying into the risk market rally yesterday. We've seen the VIX in the last two sessions drop by 10 points, Guy. It was around above 28. We're now just around the 18 handle. So this drop in implied volatility is really just evidence that we are, I guess, more calm, at least when it comes to the AI trade and this equity market rally.
And it helps out the systematic funds as they are maybe able to take a little bit more risk and maybe push this rally a little bit further. We filled the gap, according to Val. Not according to Val, according to the chart that Val brought us when it comes to US futures. Asian equities, though, continue to power ahead, and I think that's really interesting in the light of what is going on in Japan. Peter Kinsella, head of investment services UK at Union Bank Privé. I'm sure that's something that he's kind of thinking about right now. But I think the Japanese trade is really interesting because in some ways this has been the kind of the story that a lot of people have not fully got on board with yet. Japan has been one of those kind of, particularly from the equity point of view, has been a rally that's kind of been ongoing in the background. It's done as well as maybe some of the other kind of assets that we focus on more often, the S&P. Yeah. But it's continuing to power ahead. And you wonder whether or not a change in leadership maybe continues that rally. Yeah, absolutely. Let's get Peter's thoughts on this. Good morning to you, Peter. Nice to see you. So which asset do you think stands to gain the most as a result of this new Prime Minister? I mean, clearly stocks have already gained and the yen has moved in the other direction and bonds also, certainly the long end. But then there's the BOJ in the mix as well, and the BOJ hiking, it seems to be what is pushing the yen around. So what moves most on the back of this political story?
Right. Well, I think if you kind of look at it, if we're in an era of fiscal dominance, you know, a la BOJ with Takaichi and so on, that basically tells you it's an equity trade. Now, the issue you have with Nikkei now trading at expensive levels, forward P of 23 or 24, that's expensive. Dollar yen is unlikely to do a lot because if you think about the BOJ, you know, normally when the market expectation is severely off compared to what they're going to do, they let us know they leak a report to Reuters or Bloomberg, you know, set to raise rates in a few
Bloomberg
something
first,
like that.
of course.
Bloomberg,
yes,
naturally,
and I mean,
just to clarify.
Yeah.
And that's what they would normally do, but that's not been the case, right? And
well, I wondered if that's what we got this morning, only at the margin, because I think markets are expecting some hikes, but maybe a little too soon for the BOJ's taste. Yeah. And we did have this story out. It was only out around an hour and 20 minutes ago, I think. But the BOJ, according to our reporting, the BOJ not in a hurry to raise interest rates.
And there it is, right? Yeah. So that kind of tells you if they're unlikely to go in October, you know, does that change the terminal rate expectation? And that's really key. If we look at the overnight index swaps, pricing in terminal rate roughly 1%-ish, you know, by end of next year. Okay, kind of get that. But what they're doing is they're just raising rates very, very slowly. And I suspect the BOJ is hoping that a weaker dollar will do the heavy lifting on dollar yen.
How effective is that strategy, though, when ultimately a hawkish BOJ, even if it is at the margins, is still trying to combat very high inflation in Japan and now bolstered by some pretty bold stimulative fiscal policies? Those feel like contrarian agendas.
They are, and I think basically it's kind of a hope and pray strategy, right? But hope isn't a strategy. But I think really for the BOJ, the concern for them is really on the balance sheet, right? Because in a sense, they're still doing QQE, albeit at a reduced pace. And really for them, the size of their balance sheet is such that when they're raising rates, they've got to do it very, very slowly. Right, and I think that's what you're seeing under Ueda. So it'll be this, again, very gradual policy normalization without seeing an aggressive attendant sort of yen appreciation. That's what we've seen thus far.
Let's apply that roadmap to what we're seeing in the States then, because it kind of feels like a very similar story. Massive fiscal impulse coming from the U.S. government matched with monetary policy that's trying to keep inflation under tabs. Is there a lesson to be learned here, what we're seeing in Japan into the United States?
I think it's slightly different dynamics, I would suggest. I mean, inflation has come off quite aggressively in the States. One could argue that you'll see a bounce from tariff effects That's what the Fed expects. But again, they expect that to then dissipate. So when you look at the Fed's summary of economic projections, they're really of the view that inflation will continue to decline over the longer term, hence justifying what we're seeing on rates in the coming weeks. And if I look at what the market's priced in, the market and the Fed are pretty much bang in line in terms of expectations. There's not really a big differential. So overall, I would say that there's no real direct lesson for the BOJ. They're very different cycles, I would argue.
You got a lot of gold in the portfolio.
We do. You
started to hedge it. Why?
Well, there's a couple of things. We increased our gold, over the last year or two. We had nearly about 10% on our balanced funds, which is a very, very large, sort of weighting, historically. And that's been a superb trade for us. We've done very, very well on it. And what we did was last week, we just hedged a little bit of that exposure, and still to keep it. I think one of the reasons why just the price action since early September has been mad. Normally, at the beginning of a Fed rate cutting cycle, gold would rally about 10% in the first 6 to 9 months thereafter, right, once you've started. Yeah. And we've done about 24 or 25% since September. Yeah. Right? So the price action just feels completely, one-directional, without any kind of a retracement nor a correction, and that's odd. Right.
Is that not because it's just something different? It's not about the Fed. It's about finding replacements for the dollar.
It could well be. It could well be. But I mean, if that's the debasement trade, so-called, we would expect to see longer-term inflation expectations really being anchored.
You see something in tips, you see something in the dollar. You're not getting that.
You're not getting that at all, right?
So it feels like this is just liquidity. It's a momentum trade.
That's it, right. And certainly if you look last Friday, Thursday, the bid offer in gold really widened significantly. And that tells you you've only got sort of buyers rather than sellers.
You're going to hedge more of it?
I wouldn't think so, not at present. We've done a bit now. And basically at this point, it's a core holding for the coming years, right? We are in a period of fiscal dominance, financial repression eventually, higher inflation, lower rates. You need real assets, and gold is the main one.
Okay. What else? The portfolio has outperformed because of gold?
Yes, in part.
In part?
Yeah.
In terms of the other assets, what are you doing there? Are you hedging anything else? Like, what do you think about current stock valuations? And how hedged is the portfolio? Given the fact that the VIX has come down, Val was pointing that out. Sure. It's quite cheap to do a lot of this.
Yeah, I mean, we had roughly a 50% equity weighting. We used a period of sort of low vol and high valuations, basically to hedge sort of a third of those equity valuations. And again, that's not with a view to say we think equities are going to trade a lot lower. Yeah. It's just the fact that when protection is cheap, you should buy it, right? And that's basically what we did there. And again, that was basically done to lock in the gains year to date, and indeed to hedge what we've got in the coming 3 or 4 months. So that's what we've done there, and it's just very prudent risk management. That's really what we've been doing.
Peter, in 30 seconds,
sure.
There is a question of if we do see some sort of retracement in gold, that because everyone is so bullish on it, or has been, you could see some sort of repeat of 2022 where you start seeing margin calls hit portfolios. Sure. Is that a risk?
I think the main risk for gold would actually be an equity drawdown, consistent with what we saw in 2008 and 2020, when basically, multi-asset investors had large gold positions. They sell the gold to fund margin calls in equity, right? Yeah. So I think it's would be an equity-driven gold decline rather than vice versa. And the question is, what do you see there? We'll know a bit more after earnings season. But in fairness, earnings have been pretty robust thus far, right? Yeah. So, and we are seeing a truncation of tail risks, right? They're being priced out bit by bit.
Peter Kinsella, Head of Investment Services at Union Bancaire Privé. We thank you so much. Coming up on the program, we're going to talk about the latest in Japan and the trades associated with the changes. This is Bloomberg.
Good morning. 21st. We are 29 minutes away from the equity market session here in Europe. If you are in the camp that believes that we are basically in a massive liquidity rally, then you want to pay attention to things like Bitcoin, which give you maybe an indication of what is happening at the margins of that liquidity story. And this morning it has dropped reasonably hard. Looks like we're finding a floor right now. But by extension, then what you get is a move into futures, which rolled over a little after you saw this move developing. So US futures have now rolled over. European futures are now beginning to roll over. You're starting to see that. I know we're still positive, but we're beginning to just unwind some of the earlier positivity. So just keep an eye on that as we head towards the open. US futures are definitely now looking more negative.
Yeah, and we're keeping an eye on what's going on in bond markets in many parts of the world, of course. Given the politics in Japan, how that's been playing out, we're keeping an eye on the long end of the Japanese bond market. That's looking pretty calm, which means we have no drama to feed into the European session, perhaps, coming through from Japan. In terms of the sort of European-generated drama, we don't have the headlines of yesterday around France and around credit rating downgrades. So things looking pretty calm as a result, Kriti, when it comes to European bond markets.
I feel like you're jinxing it. I feel like you're tempting fate and maybe the news agenda. But let's go to where the news actually is this morning. And that, of course, is in Japan, as you suggested. Sanae Takaichi has been voted in as Japan's first female prime minister. Her appointment marking a watershed moment for the nation's male-dominated society. Bloomberg's John Herskovitz joins us from Tokyo. John, just walk us through the next steps here. Japan's first female prime minister. What happens from here?
Sure. What we're going to see over the next few hours is the new Prime Minister Takaichi is going to be naming her cabinet. So we'll see how she balances the factions, the powers within her ruling Liberal Democratic Party to make these appointments. And then it's forming a stable government. The LDP has a new coalition partner in Ishin, or the Japan Innovation Party, an Osaka-based party, and some of its priorities that it wants could be difficult. It's trying to get a temporary suspension of sales tax on groceries, food items, and it's also pushing for a reduction in the number of members of parliament. These things seem to have good broad public support, but getting them through is going to be difficult. And also with Ishin, the LDP is still short of a majority of about 2 seats in the powerful lower house. So they're going to need help to get legislation done. And all of the things which brought down the government of former Prime Minister Ishiba is still there. Rising prices are a concern. The tariffs imposed by the U.S. are still a concern. And that's just on the domestic front. On the international front, there are big summits coming up, the ASEAN summit, the APEC summit in South Korea. President Trump is supposed to be coming to Japan next week. Enormous challenges await. And Takaichi is seen as an ultra-conservative. This will be difficult for some of the neighbors in Asia to swallow. South Korea is watching with a great deal of caution, as is China, to see if she is really going to embrace some of these nationalistic policies. So the challenges are there domestically, they're there internationally, and the lingering problems that were troublesome for the previous government are still there as well.
John, what are we going to see in terms of the cabinet, and what is that going to do to maybe sort of reinforce the message that we're getting from the top?
Sure. We've gotten some indication in Japanese media about some of the choices for the key cabinet positions. For the finance minister, we could see Japan's first female finance minister, Satsuki Katayama, a former Ministry of Finance official. She is a member of the ruling LDP, and she's seen as someone who could be embracing the fiscal stimulus policies that Takaichi has brought forward. I've seen a bit of a run on the equities market because of this. For the defense minister, one of her main rivals, Shinjiro Koizumi, is supposed to take that post. He's a young up-and-comer in the LDP. The one post which is interesting for me is the foreign minister. This is expected to go to party veteran Motegi. Motegi served as foreign minister previously. He's seen as a bit of a confrontational person, and he could be taking on trade with the U.S. So Motegi speaks English quite well. He's known as being aggressive and is willing to say his piece. And with so much at stake with the relationship between Japan and the U.S., with Japan's auto industry, global supply lines, and trying to get alliance between these two big partners, it's going to be interesting to see how Motegi takes on his U.S. counterparts in any negotiations concerning trade.
John, thank you very much. Thanks for the input. Bloomberg's John Herskovitz with the latest on the politics out of Tokyo. Let's get an investor perspective. We're also joined from Tokyo by Naomi Fink, Chief Global Strategist at Amova Asset Management. Naomi, really nice to have you with us. Now, since we heard the name Takaichi at the global investor level, there's been a lot of focus on buying Japanese stocks as a result of expectations about fiscal largesse. Is that trade still in place, Naomi? Do you think Japanese stocks go higher from here, or is that all done in the expectation of her becoming Prime Minister?
Well, firstly, I would like to say I would rather hesitate to trade around Japanese politics from day to day. However, I think that there are probably some expectations embedded in the market action that could be rational. For example, the expectation for some form of fiscal stimulus. Hopefully, for the JGB market's sake, the fiscal stimulus will have a clear beginning and an end, and we will not be thrown completely off the path to primary balance, which we are not very far from right now. As far as monetary goes, I know that during Abenomics, there was a lot of coordination between the government and Bank of Japan, but I would really underscore here that the conditions right now are very, very different from the economy that Prime Minister Abe inherited in 2012. We have inflation that's actually positive and has been positive for 3 years now. We have a much lower unemployment rate, such that there's a labor supply shortage. That's also demographics as well. We have positive growth, and we have had for several quarters. We have governance and corporate profitability. So it's a very different situation. I would really hesitate to impose exactly what happened in 2012 to the economy right now. But I think Takaichi, being an experienced politician, also knows this as well. And so I think we're unlikely just to see Abenomics Part 2. I think we will probably see a greater emphasis on inflation, for example, which is a problem.
Okay, yes, and as you say, the inflation dynamic is very different to when we saw Prime Minister Abe in charge. Naomi, we're hearing or seeing a lot of talk about the Widowmaker trade right now on the Bloomberg terminal. So those trying to make money going short JGBs, perhaps because they expect interest rate hikes, perhaps because they expect fiscal largesse and yields to go higher as a result. What do you make of the JGB curve? What are you thinking about that and how that will respond to the change in leadership?
So if we look at the move in the JGB curve since the Bank of Japan exited yield curve control and negative interest rate policies, it's basically kind of moved up in parallel. We haven't really seen a massive steepening of that curve. So it seems like it's relatively rational to think that long-term rates are also going to go up as the Bank of Japan normalizes policy. And that's what the Bank of Japan can do to combat inflation. And inflation is Bank of Japan's bailiwick. So I would say that it's totally rational, especially given the inflation fighting and also the backing away from the quantitative easing and the accumulation of large balances of JGBs on the Bank of Japan's balance sheet, that yields should move upward. I think the key here is whether the move is orderly, and probably some responsible fiscal policy, even if there's near-term stimulus, is going to play a factor in how this all turns out.
Well, Naomi, let's talk about the Japanese inflation picture a little bit further. It's famous for importing inflation via energy prices, among others. This new prime minister is talking about rolling back some of the fuel taxes, for example. At the same time, we're also talking about Japan, talking about limiting dependence on things like Russian LNG, another major story crossing the Bloomberg terminal this morning. Is Japan getting lucky with this commodities environment right now?
Well, I think Japan has always been an energy importer, so it doesn't really have the luxury of doing things like, for example, saying that they're going to go all in on fossil fuels. So renewables are part of the mix. Equally, I know that there's been a focus on nuclear. It's always been part of the plan to meet future demands for energy to turn reactors back on, even though it may be unpopular with the electorate. Japan has to look at many different sources to meet its future energy needs, even despite the demographics, because of things like data centers, the need to raise capacity, to increase productivity. There is going to be an increasing energy demand. So there's no one magic bullet here. Japan has to look at all of its options.
Naomi, let's broaden out the picture if we can, specifically to China. Of course, it feels like the next major catalyst for global markets outside of these kind of country-specific or region-specific issues is whether or not we get a trade truce, a trade extension, a trade rift between the world's two largest economies, the U.S. and China, of course. Just walk us through the trades around that. Is this a wait and see moment, or is this a actively position for the worst case scenario moment?
Well, since the start of the U.S. administration, we've seen sort of a pattern, escalating tensions and this type of tit-for-tat dialogue back and forward. But then you get conditions imposed and then put on hold, temporary trade truce, etc. So I don't, even though perhaps the verbal stakes are escalating, I don't see a reason why we should see a sudden break in negotiations. I think probably on both sides, the escalation may have it may be a negotiation tactic. I don't think that either side really wants to halt trade wholesale. It's all about trying to control the narrative. So I think that that's the context behind what we've seen in terms of the dialogue. I know that it has had, I think the initial impact on markets in April, for example, was the greatest. And since then, that impact on markets has really been declining. I don't think it's unimportant, but whether we should take at face value some of the threats that come through has become very questionable, especially since we've seen the history of these discussions since April.
Naomi, final quick question. The last political setup that the LDP was in was very stable for a very long time. Do you think the current setup is going to be as stable for the same amount of time?
Well, I would say that there are dynamics now in Japan that haven't been experienced for years. For example, 3 years of positive inflation. So that can be unsettling for households, unsettling for the electorate. That said, if we take a look at Japan's institutional setup, it may be more difficult to destabilize Japan just with a change in leadership. I mean, we have, for example, within the LDP's history, had periods of quick turnover in prime ministers, and nothing really bad has happened as a result of it. So I think so long as Japan is able to keep the fundamentals of the democratic institutions there, represent the electorate, and also keep what it has right now going, and this is the recovery from the lost decades, the reflation, the governance shifts, and the household taking interest again in financial markets. If it can keep all of this going, then it's probably in a relatively good spot, even if we do have turnover in prime ministers.
Naomi, great to catch up. Thanks for the analysis. Really appreciate it. Naomi Fink, Chief Global Strategist, Sitamovo Asset Management, joining us on Japanese politics. Coming up, Unilever revising the timetable for the demerger of Magnum Ice Cream due to, get this, the US federal government shutdown. That's one of our stocks that we're going to be watching as we head towards the open in 16 minutes. This is Bloomberg. Minutes to the market open. We're rolling over a little bit when it comes to the futures picture. You've seen that maybe in the Bitcoin trade and then leading basically back into the futures trade when it comes to equities. We're going to keep watching that as we head towards the open. The other thing we're keeping a very firm eye on this morning is the Bloomberg Tech Summit, which is taking place here in London. We're going to be getting underway very, very shortly. We've got some of the top voices in European tech to discuss everything from sovereignty to AI regulation to cybersecurity, industrial policy. How does it all plug together? Well, let's try and get an answer to all of that and a preview of what we can expect. Tom is there. Tom McKenzie at this event. What are we looking at?
Sovereignty is a key theme at the event, Guy, that gets underway in the next hour or so here in central London. And it's really salient, I think, given the news flow that we've seen just in the last day, in fact, whether it's the US-Australia minerals deal with that focus on rare earths, the question about how reliant Europe as well as the US is on rare earths from China and what that means for our defence sector. When we see the flip-flopping once again of President Trump in terms of his support for Ukraine, a reminder again of the needs for Europe to have its own defence capabilities. And defence tech is going to be key. You can't have sovereignty, is the argument, without defence sovereignty. And that's where players like Helsim come into play. And on the rare earth story, they are also reliant on those rare earths for their components. So that's a question for them. How do you actually build sovereign and resilient supply chains in the defense space? Talking of space, you had the news from NASA. Even NASA are concerned about the over-reliance on SpaceX. What about Europe then, in terms of Starlink and our reliance on Starlink and on Elon Musk? So space and space sovereignty is going to be another conversation. And then the sovereignty around AI itself with large language models like Mistral, which really is the key leader when it comes to sovereign AI and that push in Europe. We're going to be speaking and hearing from Mistral as well. So on all of those fronts, the focus and the theme around sovereignty is going to tie into all of that. We're going to be talking robotics as well, agentic AI, embedded AI. That will also be front and center in terms of the conversations here. But I think it's just a reminder, as we look at the news flow, whether it's the outages at AWS and the reliance of European companies on that US data center provider, or indeed what's happening on the geopolitics, Ukraine and Russia, and then space, this is a very timely event to be speaking to leaders in this tech world, tech ecosystem in here, and what they're doing in able to deliver real sovereign solutions.
Tom, looking forward to it. Looking forward to the great coverage that's going to come out of that event. Bloomberg Tech coming up in London, and Tom's going to be speaking to the Pigment co-founder and co-CEO Eléonore Crespo about effectively implementing and scaling critically AI. We're also going to be hearing from other lead voices in the tech space throughout the day. CoreWeave, Helsing, Pandora Bots and Upwind all joining us throughout the day. You can follow it all on Top Live as well. Some fantastic corporate names there.
Absolutely. Love those. Let's talk about the markets and what we've seen at the macro level. We are joined now by Bloomberg Markets Live. Skylar Montgomery Koning on set with us this morning. Skylar, we've seen the 10-year, good morning, seen the 10-year push through that 4% level. We're at 3.97% right now. Shutdowns can be good for treasuries. What are we expecting to see? What are you watching for next when it comes to Treasury markets?
Yeah, absolutely. So what you've seen over the past few months is the rally in Treasuries has largely been because you've priced in more Fed easing. I think also it's very true that the U.S. government bond market has returned as the safe haven of choice. From here, though, I think there's still room to rally. And the reason I say that is if you think about your 10-year, it's essentially just what you expect from Fed funds over the next 10 years, plus some kind of term premium. Now, the market expects we're going to cut twice this year and then get to a 3% terminal rate. If you compound those forwards and add a 60 basis point premium, that gets you to a 3.7% 10-year. So there is still room.
OK. But we're also doing this in a vacuum at the moment. No data, kind of, we're slightly, therefore, searching around for clues as to what is going on. Maybe we'll get some from the earnings story, but we're going to get some definitely on Friday. Are we just waiting for the CPI number?
It does very much feel like that. What I will say is generally market reactions to shutdowns is that it's very muted. And the reason behind that is that there's not usually a huge economic impact. So, yes, people don't get paid, but they get back pay eventually. So it's an issue around consumption timing. The one thing that differs there slightly is you do get a bid for treasuries because it's some kind of insurance as risks are tilted firmly to the downside. Now, I think the longer the shutdown goes on, the more you have risks to growth because if you think about COVID, if you go 2 months without having a haircut, you don't then go, I need 2 haircuts now that things are returning to normal. There's also a confidence issue. You also have spillovers into contract workers. And those contract workers don't get back pay. And the longest shutdown we've had has been 35 days, and it was a partial shutdown. We're going into week 4, and this is a full shutdown. So I think certainly risks to growth are tilted to the downside, and so then risks to bonds are tilted to the upside from that. But as you say, inflation data is on Friday, and that valuation I was talking about is based off of the Fed funds path. So if you have a sharply higher Fed funds path, then it becomes much harder to justify a rally.
Well, Skylar, just give us kind of maybe a floor in what that looks like when it comes to yields, because we have had guests on this program as recently as yesterday talking to us about the risk of a 10-year going to 4.7, 4.8. We're at 3.97 right now on the 10-year. Give us a floor.
Yeah, I mean, I'm not sure there really is a floor. It very much depends on how economic data evolves and inflation. Personally, I'm very worried about inflation in the U.S. because we're not getting the data coming in. You haven't had it reflected in markets. But I think because you have tariff level inflation, you have immigration pressure inflation, you're seeing inflationary pressures that are just delayed rather than avoided altogether. So I think certainly the floor is maybe higher than what the market assesses on that 10-year.
Certainly something we're going to keep a very, very close eye on, and whether or not you see a very quick bounce back. Bloomberg MLive Skylar Montgomery Koning joining us this morning. You get more up-to-date analysis from her and the team. ML Ivy Go is the function on your Bloomberg terminal. Let's go from the macro to the micro. Get our stocks to watch with Chloe Melly. Chloe.
Good morning, Kriti. Let's keep an eye on European suppliers to Apple this morning after it looks like there is much stronger than expected demand for the latest iPhone series, the iPhone 17. So that's led to a boost in the shares in Asian suppliers. We'll see if we get the same for those European suppliers this morning. A lot of those derive a really big part of their revenue from Apple's. For example, STMicro, the chip maker, derives about 15% of its revenue. Universal Music Group, which makes that music catalog, provides the music catalog, derives about 11%. So we could see a boost in the shares on the back of that this morning. Moving on to BNP, which could see potentially an additional day of weakness after a court ruling linked it to a genocide case in Sudan, and that opens it up to massive settlements. So we saw a massive dip in the shares yesterday that could continue today. An attorney for the plaintiffs mentioned that the settlements could range in the billions. So obviously we could see that decline this morning. And finally, Unilever has pushed back the demerger of its Magnum ice cream unit. It said that because of the US government shutdown, it would have to push that back. The original schedule was for November the 10th for those shares to be listed. Obviously, that could be that will be delayed,
Chloe,
and we'll see how much of that impact.
Very much. Our equities reporter Chloe Melly will be back with the market open. This is Bloomberg.
Tuesday morning, a couple of minutes to go until the markets start trading here in Europe. Let's talk about what is happening in terms of the narrative coming out of yesterday into today. Yesterday was a really solid session for European equities. We gapped at the beginning. We continued to rally. We rallied hard into the close. That was mirroring what we saw stateside. What was interesting after that, though, was the states basically just drifted sideways. So an initial climb stateside and then just a drift sideways. Remember, we basically have now filled the gap left by the 10th. That is a story that obviously is interesting. We've closed the gap. It's taken a long time. Is there momentum to continue that trade? Well, this morning things are looking a little softer, Kriti.
Slightly softer, and you're seeing that perhaps driven by what you're seeing in the U.S. futures picture as well, because Eurostoxx 50 futures have been kind of tilted to the downside for most of the pre-market session. The FTSE 100, however, has been the outperformer, but not by much, Anna, higher by 0.2%. To me, what stands out is that the French market is actually part of that outperformance to the tune about 0.2% as well. Is that a banking story? Is that just a little bit of reprieve? I'm not super sure.
Yeah, interesting, because the French and the UK markets sort of went their own way yesterday as well, or at least didn't gain as much as the session that we saw in some of these European markets. Kriti, let's talk about some of these individual names that could be on the move and sectors. Apple suppliers could be in focus. Lots of reports about iPhone 17 doing pretty well. Asian suppliers actually preempted that, so we'll see whether Europe did or has yet to price that in. BNP Paribas in focus. Could that be something that explains what we're seeing on the French market? Might we see a bounce down by 10% at one point yesterday? They lost that court case. They're appealing. Lots of questions about what the settlement might look like. Mediobanca downgrading the stock, and Unilever delaying the demerger of their ice cream business. Guy.
OK, here we go. Tuesday session. Futures a little soft and soggy. Let's talk about the kind of session we're going to see in front of us. What is going to be the catalyst? Well, there's not an early one, I have to say. Indications out of yesterday for a fairly flat open seem to be being fulfilled by the FTSE 100. It is climbing up 0.2% as anticipated by the futures picture. We're expecting maybe things to be a little softer in Germany, but you're going to have to wait. But yesterday was epic for the German market, 1.8% to the upside. That was a very solid move. So we get the IBEX up by 0.2%. We get the FTSE slightly outperforming expectations, up by 0.3%. US futures, though, are basically signalling a fairly flat start stateside as well. So that's interesting to price in. There's no news, clearly, in Germany this morning. Nothing to see here. The DAX is up by 0.1%. No big move there. The CAC 40 has actually got a bit more action in it this morning. We'll see how BNP Paribas trades this morning. That's going to be a really interesting one to watch out for. You're also getting maybe a little bit more positive news around the OAT market this morning as well when it comes to what is happening in terms of the mandates around some of the big bond funds. Maybe that helps out at the margin as well. But the CAC 40 has yet to open. The DAX is up by 0.2%. What are we seeing in stocks and single stocks and sectors, Kriti? What's going on there?
Well, right off the bat, I'm looking at a lot of your core six kind of companies here because they're the ones that seem to be driving to the downside, despite seeing green on the screen on the broader indices. ASML, for example, is your biggest downside mover. You're seeing plenty of pain in the healthcare space as well. AstraZeneca, Novo Nordisk, Sanofi, all taking a little bit of a hit. And then you got a series of French tickers. So when we do see the CAC 40 actually open, I wonder if it's going to be a downside story, Anna.
Yes, we don't have that open just yet, do we? But we do have the BNP share price open, and it's down, but not by much. It's actually pretty flat, but down 0.2%. But that sort of moves against the overall trend that we're seeing in these markets for the banking sector. So the banking sector as a whole is trading up by 0.6%. So if there was an element of other things weighing on banks yesterday, and there was a little bit of that in some of the French banks that were weaker because of that downgrade we saw to the credit rating for the country, and some of that is bouncing back. We see SocGen up by 1%, for example, today. But it isn't a French story. I mean, we've got HSBC up by 1.7%.
But BNP hasn't bounced this morning.
No.
Which is what you would have expected after an 8% move to the downside yesterday. You're not getting that bounce coming through, which tells you that the market is still doesn't feel like it knows enough about this narrative.
Huge lack of clarity as to whether there'll be any kind of settlement and what the scale of any settlement might look like. Because as Bloomberg Intelligence were pointing out yesterday, if you run the numbers based on the money paid out to just 3 of the people in this case, if you run those numbers, it looks really scary. But obviously BNP pushing back and suggesting that that's not the right approach, and they say they are appealing. So there's lots more we still have to learn on this story. But maybe nothing sufficiently new this morning, although now the stock down by 0.8%.
We'll get more context on that later in the show, perhaps what the path forward looks like for that bank and the broader banking sector. In the meantime, let's get a quick check, maybe a little bit more analysis, I should say, on these broader markets. Louise Dudley, Global Equities Portfolio Manager at Federated Hermes, joins us around the table this morning. Louise, a pleasure to see you, as always. I think we're kind of trying to work out what the next catalyst is. Guys mentioned earnings this morning kind of being that next key driver. Is it earnings? Is it the trade conversation? Is it the geopolitics? For you, what's top of mind?
So I think at the moment for earnings, we haven't seen as much exuberance as perhaps we might have expected from the European names. So we hadn't maybe seen as many downward revisions during the quarter as we typically see. And so perhaps we expected the beats to be a bit stronger, and that hasn't come through. Obviously, we have had a lot of that kind of trade war tensions ongoing for a lot of those names that have held them back. We've also had a bit of the shock that's come through in terms of the banking sector as well. So there's been a lot to digest, but in general, I think the earnings story for European names hasn't come through. Yet to see whether that will. And obviously, we've got a number of names. We're still early in that earnings reporting cycle.
What does a positive earnings story look like? Is it more buybacks? Is it more dividends? Is it margin compression and not passing those costs on to consumers? What does that success look like?
So I think, looking into next year, we'd hope that companies are starting to benefit from lower interest rates, lower inflation, that they're starting to get more of a handle in terms of their overall supply chain, input costs, and also maybe a little bit more positive momentum around labour as well. So that's something that continues to be a bit of a hindrance to a lot of European names. If we see that subside a little bit, then that will also be another catalyst. Plus, the AI productivity type trade, we expect to see more and more noise for that to be cited as something where they are seeing actually the return on that investment coming through, and whether that means that maybe they're not actually needing to hire, whether they're seeing increased monetization from some of their products through additional kind of pull through. So I think those are areas that we're really watching at the moment.
Yes, we'll see whether that widens the AI trade if we start to see more reference to that. Louise, let me ask you about China, because of course some European business is still very dependent on what happens in China, even if that dynamic is not what it was. You talk about some gradual recovery in consumer confidence. I mean, yesterday we saw these retail sales numbers didn't look great, and again the narrative has been weakness domestically, making up for it by exporting to the rest of the world. So what are you seeing in the sort of intra-China dynamic that gives you reason to be more positive?
Yeah, I think just the overall kind of dynamics within the market in terms of how it's split in terms of the different sectors. We do see that actually there is a lot of optimism to come through. I think also with the expectation that there will be a cut, I think will also add to that consumer confidence as well. I think also, this time of year tends to be a bit more kind of bullish. So I think a lot of people will be watching those holiday numbers and how they come through as well. But I think also kind of looking into next year, I think, we've also had some positive news around additional AI uses, additional models that I think will also add to that kind of exuberance and confidence coming through.
OK, so that's the China story. Thinking more globally, or I suppose with a US lens, we were talking with our colleague Skylar Montgomery-Koning earlier about whether we're just really waiting for more data. We're kind of in the dark a little bit about what's going on with the US. We'll get that CPI data later on this week, it seems, in the end. But we haven't had any data for quite a long time. Do you get the sense that markets are waiting for that, waiting for a bit more of a light to be shone on the underlying conditions?
Yeah, I think so. Plus, also, there's just a general question mark of how long the shutdown will continue and when that might be resolved. And obviously, they, in general, kind of say that, the markets do rebound, that productivity does return. But there is also always a wait and see in terms of how long it persists and how long and what that overall impact might be. I think that underlying uncertainty for particularly the kind of the lower end consumer, I think, is still there. And I think while that uncertainty weighs, I think we'll see that holding back from a consumer perspective in terms of spending.
Would you hedge the downside at this point? It's kind of cheap to do so again.
That is what kind of some people are saying. Certainly for us, we maintain a long-only position, and I think there's plenty of other areas in the market that can offer some attractive valuations that we think would...
Okay. You don't have to hedge it through options, but are you taking a more defensive tilt?
So we're not. I think, in general, we are balanced across, we're broadly diversified across different styles. Okay. So in particular, although momentum's been very strong this year, quality hasn't performed. So to a certain extent, maybe coming into this year and at the end of the year, assuming some of that quality rebound might materialise. That said, because of the interest rate cuts that are expected to come in, we still have that kind of valuation exposure as well. So those value names that we expect to get a little bit more positivity around some of the earnings that are coming through in the next week or so.
Does it all hang on rate cuts at this point?
Not just rate cuts, I think also deregulation and tax cuts are also key. I think that deregulation move through into next year and even the following year will continue to be positive for the US names.
Talk to us about the buyback environment then, given what he's talking about. If there is a force that kind of pushes against any sort of market pessimism, feels like buybacks might be that. How significant is that force?
So I think, over the last couple of years, it has been a significant contribution to that kind of overall kind of stock momentum that we've seen. We are seeing less of that at the moment. And I think, we're seeing companies are choosing maybe to hold on to more of their cash also because they're seeing more growth opportunities out there, which I think is a positive thing. That said, where companies are making buyback announcements, they have actually been maybe stronger than the market have expected. I think we're kind of maybe at a lows in terms of buybacks. We expect more of that going forward.
Louise, your overall take on earnings season so far. I thought Oppenheimer putting out quite a positive comment yesterday on US earnings so far. We haven't had many of them, of course, but 16% of businesses, I think, showing an increase in profit versus an expectation of 12%. What are you seeing across Europe or the universe that you look at? What's impressing or otherwise?
Yeah, so Europe hasn't been as strong as the US. I think that's been the big takeaway so far. I think within the US, there's a lot more optimism about what next year will bring. And I think, there is still a bit of the kind of tariff overhang and how those costs will impact. But I think we have also had a lot of news from companies through last earnings season and this earnings season about how they're mitigating some of those costs. And in general, companies do seem to be doing a better job than they thought at the start of the year that they'd be able to kind of pass on in terms of pricing pressure. So in general, for the US, it looks stronger than maybe we were middle of the year. And certainly from earnings, that's supporting that trade at the moment.
Louise, great to see you. Thanks for coming to see us. Really appreciate it. Louise Dudley, Global Equities Portfolio Manager, joining us from Federated Hermes. OK, let's talk a little bit about what we're seeing at the centre of gravity here in Europe this morning and where the price action is. We're starting, as Louise says, to get into the earnings season. It's early days. We're going to find out what is going to happen as we work our way through it. There's a few stocks that are on the move. Husqvarna is one of them. But at the centre of gravity this morning, you can see that the defence story is the standout. Did we hit a bottom yesterday or earlier late last week in the defence trade, because we're starting to gain a little bit of traction. It was one of the reasons why we saw maybe the German market doing better yesterday. The defence names came roaring back. It is the standout story in Europe. You've seen around 10 days lower. We saw maybe a bottoming of that back end of last week. Are we going to regain and fill some of that gap? I think is a key question now for European equities. Elsewhere, there's a lot of weakness, and we've seen that maybe being preluded by the move that we saw earlier on in Bitcoin. Let's talk about some of the individual names, some of this earnings that we're watching, some of the big banks also firmly in focus this morning. Chloe Mellie's here with the details.
Good morning, guys. Some positive movement for HSBC this morning after it appointed a new CEO for its UK bank. So this is part of the broader changes that the group CEO, George Elderi, has been making over the last few months, making big management changes, changing the divisions as well, streamlining everything, trying to improve that profitability. And this latest appointment seems to be quite well received by the market, and we are up 1.7% for HSBC this morning. Moving on to Coca-Cola, HBC, the bottling partner to Coca-Cola, is down this morning after it announced that it was combining with another Coca-Cola bottling company in Africa in a deal worth $2.6 billion. And this is something that doesn't seem to be well received by the market at all. We are down 4.3% this morning. This would create the second largest bottling partner for Coca-Cola globally, but it seems that that's not making investors very happy. Moving on to BNP Paribas, which is seeing a second day of weakness today after a court ruling linked it to a genocide case in Sudan, which puts it on the hook for massive settlements that could range in the billions of dollars. So we are down 1.3% this morning. We had seen a massive dip yesterday on the back of that court ruling. And finally, let's move on to Edenred, which is a payment solutions provider, and we are seeing a really big positive move this morning for Edenred, up 10.7% after reporting better than expected third quarter revenue. And analysts are saying that this provides some relief after a lot of weakness in those shares for Edenred.
Chloe, thank you. Chloe Mellie from our equities team. Let's just mention, Guy, you were pointing this one out, Husqvarna, agricultural machinery, chainsaws, trimmers, blowers, commercial lawnmowers, etc.
Important stuff.
Important stuff. Well, what we were drawn to this morning was the fact that the stock is down by 10.7%. It's not a big stock. It's $3 billion market cap. But it's interesting that the things they cite for the weakness in their report, saying uncertainty remains, particularly in North America, ongoing trade policy turbulence, foreign exchange volatility, subdued consumer sentiment, seem to be the things that they're talking about. I suppose some of these items are bigger investments.
But these are the kind of clues we want from the earnings season.
Yeah.
We want to understand what is happening in terms of the impact that the trade story is having on corporate profitability. We want to understand what's happening with the consumer. Kind of where does that... This may not be a direct consumer story. You can buy a Husqvarna chainsaw, I'm sure, and you can buy trimmers and you can buy all kinds of things, snow blowers and all that kind of essential kit that I love so much. What is the consumer doing right now? Is that the kind of thing you put off? If your old one is not looking that good, do you try and hang on to it for a little bit longer? Is that kind of where the consumer is at the moment?
Yes.
And I think that there's some quite interesting clues in that
Getting
kind of
a little
stuff.
insight, Kriti, into Guy's
live
post-show life.
Yeah.
I think that's what's happening here.
I'm
I've
learning
got a
so
very
much.
old strimmer. It needs replacing. I'm going to hold on to it for the time being.
This is a conversation for the break. This is what we'll be talking about.
I don't know. I'm learning. This is the news you can use. It's like, what does Guy Johnson do at 9:01 a.m.? To your point, though, of some of the earnings that are coming out of this, it's interesting. They're talking as well about closing down some of their factories as well and outsourcing them to third parties, which is something we've heard from a couple of other companies as well in terms of cost efficiency. I believe this was there was a company yesterday. It's missing. I'm completely missing it. That had to do with wind turbines. It's going to come to me in the Vestas. You're right. That was the one.
Yes, and part of the news we heard around Kering and L'Oreal was to do with what you manufacture in-house and what you get somebody else to make for you. Speaking of luxury brands and makeup brands, in fact, we will check in on L'Oreal ahead of its third quarter sales and revenue figures. Those are hitting the terminal later today. We'll get to that conversation next. This is Bloomberg.
18 minutes past the hour, 18 minutes into the equity market session, going nowhere in a hurry, to be honest. Are we marking time looking for a catalyst, and does that catalyst come from what is happening in Bitcoin and gold this morning? Just keep an eye particularly on Bitcoin. There's a link into Treasuries, which is being pointed out on the MLive blog this morning as well, which is worth focusing on. And if you're in a liquidity market, this is the stuff you want to pay attention to. And you are certainly seeing some weakness in particularly Bitcoin this morning, which people will pay attention to. What else are we paying attention attention to? Well, let's take a look at what is happening with the rare earth trade, particularly the Australian rare earth trade. We saw some big moves over the last 48 hours as a result of President Donald Trump signing an agreement with the Australian Prime Minister, Anthony Albanese, for a supply of critical minerals that are basically there to replace what China is holding hostage at the moment. Critical to the chip industry, critical to the defence industry. Joining us now to talk about all of this, Martin Ritchie, who leads our metals and mining coverage out of Shanghai. Martin, talk us through some of the details of this deal. How long has it been in the works? How quickly can the Australians get this stuff to market?
Yeah, another hectic day for rare earths after a kind of action-packed year. This agreement with Australia really tries to lock in for the US some of the supplies from emerging projects in Australia, which is the very mineral resources-rich country. It was kind of presaged by a visit to Washington by a whole stack of Australian companies about a month ago, when they were sort of asked to essentially pitch to the US, given a bunch of questions about who does what do you guys need? And from that has emerged, I think, somewhat more quickly than I think the industry had expected, a fairly detailed deal. So you're seeing the US and Australian governments invest jointly in a whole swathe of projects. And we saw, as you said, some of those big stock moves this morning. Arafura Rare Earths, one of the beneficiaries, up 29%. It did come down later, and several other firms making very big moves. And it's not just about rare earths, which are a kind of subset of critical minerals. There's also things like gallium, which China put export controls on even long before rare earths. So there's a sort of emerging strategy from the Trump administration here.
Yes, and Martin, you've referenced a bit of the market reaction that we've seen here. It's interesting that some of the Australian rare earth businesses sort of popped in anticipation of this, didn't they? And then maybe have pulled back a little. What has struck you as interesting about the market reaction?
Yeah, there's already been a big pop-up in the share prices over the past few weeks because some of these announcements have been trailed a little bit. I think what's happening now is that there's going to be a bit of guesswork about who's next. So this initial agreement sees, I think, $2 billion, $1 billion each from each of the governments investing in companies. Some of those were named, made announcements already. But Anthony Albanese, the Australian Prime Minister, said there could be up to $8.5 billion on projects receiving funds. So there's going to be guesswork in terms of who's the next to get money, and a lot of these companies angling for cash. So, I mean, broadly, what you're seeing is this kind of premium now in the rare earth space because you've got the state intervening to support a lot of projects, not just in Australia, but inside the US, some in Europe, and some in the rest of the world.
Martin, talk to us a little bit about how we marry what we've learned from the deal with Australia and the United States to a potential or deal or no deal between the United States and China. Just make that link for us.
One of the things that Trump said in his White House meeting, I can't remember the exact words, but he's essentially saying we're going to be absolutely flush with critical minerals a year from now. So that kind of speaks to how he sees this deal, that it's going to give him leverage in negotiating with China. He's set to meet. He says he's going to meet Xi Jinping later this month in South Korea. It gives, going into that meeting, it gives him a sort of sense of we are fighting back. This great Chinese card that's been played maybe isn't all it's cracked up to be. But the difficulty is that, yes, they're rolling out money, putting money into these projects, but mining, processing, refining, making rare earth magnets, the main product, is going to take a much longer time. So you have to be sceptical about this giving the US any kind of immediate clout in fighting back against China.
All right, Bloomberg's Martin Ritchie walking us through the rare earths and critical mineral story. We thank you so much. Let's go to another sector that has our attention. That, of course, is luxury, makeup, beauty, all the things that I certainly care about. Investors will be closely watching L'Oreal today as the cosmetics giant posts its third quarter sales and revenue figures after the market. Joining us for a preview is Deborah Atkin from Bloomberg Intelligence. Deborah, just walk us through what the market is expecting from some of these figures.
So for L'Oreal overall this evening, we're expecting a 5% like-for-like growth or thereabouts. And actually, across the four divisions, it's quite a similar pattern in terms of growth. The big trends and what we're looking for in terms of pushing the story is about looks improving, derma leading the growth, and also consumer being quite stable versus the last quarter. So all within that 4 to 5% growth rate. And in particular, that brings the second half and what's expected for 4Q with lots of phase-in, pipeline and others, meaning that L'Oreal would have a better second half than first half and hope to beat by around 100 basis points the 4% beauty industry growth rate this year.
What are they going to say about China?
Yeah, we're looking for growth in China and mid-single digit at least, and that comes on the back of LVMH last week having pushed out within their numbers mid to high single digit growth returning in China. We also saw, following LVMH from Chow Tai-fook, one of the big jewellery retailers over there, they also posed a much improved sentiment out of China from the consumer, even though the price of gold is so high. Yeah. So jewellery at the high end is also doing very well.
And we started this conversation thinking about L'Oreal. Let's continue to do that, Deborah, but bring in Caring as well, because the sort of dust has settled. We've had 24 hours, I suppose, to think about the acquisition of Caring's beauty business by L'Oreal.
Yes.
What's the takeaway?
Yeah, so it's a €4 billion deal, and what it does is it brings the fine fragrance brand of Creed, which was acquired in 2023 under the prior CEO of Kering, into L'Oreal's portfolio, probably through the first half of 2026. It really closes a high-end gap for them. You know, since 2017, we saw, because these beauty companies and luxury companies are really vying in the same beauty space now. So we saw in 2017, LVMH acquire the Maison Coeur de Jeanne, which has Baccarat Rouge, and you're buying that well above the price points that you would see Prada's and others, which are sitting within the L'Oreal portfolio. And incidentally, where L'Oreal is doing very well since 2021. So it's about the mindset of higher growth rate at higher price points, young consumers really buying into on-trend, high-end brands.
Younger consumers buying really high-end fragrance.
Yes.
OK, Deborah, thank you very much. Bloomberg's Deborah Atkin from Bloomberg Intelligence with the take on L'Oreal and Caring. Coming up, we check in on day 2 of the BNP Paribas fallout after a US court found that the French bank was liable for damages to Sudanese refugees. More on that and wider markets next. This is Bloomberg.
Welcome back to the opening trade. About 30 minutes into today's session, green on the screen across the board. Marginal moves in most of the indexes, though. I'm going to start up at the top. The Europe Stock 600, higher by about 0.1%. A similar move in the CAC 40 and the DAX as well. But the party is right here in London. The FTSE 100 higher by almost 0.4%. Let's go to the life of the party, Guy. Walk us through what's going on.
That's where the party is this morning. We're up by 0.3. There's nothing going on out there, basically. This is a very quiet market. It looks like we're looking for another catalyst. If you want to see catalyst, though, take a look at what is happening with some of the alternative assets. Take a look at Bitcoin. Take a look at what is happening maybe in the gold space as well this morning. Defense stocks are coming back, which I think is interesting. 354 up, 225 down. I'm not sure there's much of a clue in there. Volume is pretty much bang on the average of the last 20 days. Again, there's not much of a clue as to what is happening there. This is a market in need of a narrative this morning. I'm sure we'll find one as the day progresses. BPBR is up this morning. Apparently it's buying a synthetic position in its own stock. Anyway, I'm going to dig into that, try and understand it a little bit more a little bit later. Assa Abloy is up. So there's some good earnings coming out of the Scandies this morning. Assa's one of them, Getinge is the other one, up by 3%. Husqvarna, as we already mentioned, in the chainsaw space, looking a little bit weaker this morning. So it's maybe a more mixed picture coming out when it comes to the 52 highs and 52-week lows. But Assa and Getinge are both at 52-week highs, Anna.
OK, let's put that into some context and think about some of the other stories that we need to know about this morning. Rare earth shares jumped in Sydney after the Australian Prime Minister Anthony Albanese signed a deal with Donald Trump that's been described as a, quote, shot in the arm for the Aussie industry. Both countries will spend $1 billion over the next 6 months on projects to secure a pipeline of critical minerals essential to the chip and defence sectors. Elsewhere, Donald Trump has cast doubt on Ukraine's ability to defeat Russia, walking back on earlier upbeat assessments. Addressing Kyiv's chances, Trump told reporters, quote, I don't think they will, but they could still win it. The remarks mark another shift in tone for the US president ahead of his meeting with the Russian counterpart Vladimir Putin. That's coming up in Hungary, of course. And Japanese stocks whipsawed and the yen dropped as Sanae Takaichi became Japan's first female prime minister. Takaichi won the parliamentary vote earlier today, securing 237 votes in Japan's powerful lower house, before then winning a runoff in the upper house. Her ascension is expected to open the way for more fiscal spending in Japan. Kriti.
Let's go to another one of our top stories this morning in the stock market universe. That brings us to the banking sector. I want to check in on BNP Paribas, the stock dropping again today following its sizable losses yesterday. It comes after a court ruling links the French bank to human rights abuses in Sudan, triggering speculation that the firm will have to pay out a settlement that could total billions. Joining us now for more is Tom Metcalf, who leads our finance coverage in EMEA. Tom, just walk us through what we know about this BNP Paribas story and where it could go.
Yeah, well, I think it's one of those big potential impacts, and that's the emphasis on potential. So, the stock dropped about 8% yesterday, effectively because they lost a case in US courts where 3 Sudanese citizens who now live in the US effectively were able to claim damages against BNP for supporting the regime over there, and saying BNP Paribas is in effect, responsible in some ways. So they paid out about $6 to $7 million each to those plaintiffs, and the reason the stock is dropping so much of a $21 million verdict is because there's another 20,000 plus plaintiffs out there in the US. Now, of course, with these kind of class action suits, it's dangerous to kind of just extrapolate out, from an individual all the way across many thousands of cases. But I think what is clear is there's certainly a new risk that maybe wasn't perceived as being around this very, very long-running legal case, that perhaps there will be a big cost to BNP Paribas. And late last night, one of the lawyers for the plaintiffs was saying, look, we really think BNP Paribas should come to the table, should consider settling. And, the figures they were mooting was in the sort of the low billions. So, with the stock dropping 8%, down again 1% or 2%, it does suggest that drop's maybe a bit overdone, but that's always the way when there's no certainty. And until there's clarity of just how big this risk could be, I think the market's probably just taken the worst case scenario and sitting on it for now.
The UK financial regulation and ring fencing. Let's talk about how HSBC is kind of fitting into all of this story this morning. New CEO coming in. This is still a ring fence bank. We should remember this. This is effectively a separate entity. What does it tell us about the future of that business, the new CEO, and what does he tell us about strategy?
Yeah, some musical chairs in UK banking. So this is former NatWest executive Bloomberg coming in, and I think it's kind of, again, under the new CEO, Georges Elhedery of the group, the latest shift there, they moved the current CEO into sort of a more group-facing role. I think, for HSBC, the UK is just one of its 2 tentpole markets, right? You've seen that huge investment, that huge bet they placed on Hong Kong. I think what this shows is probably for the UK, it's their mature market. They're not likely to maybe expand massively, but equally, they're not going to shrink. It's a huge pool of liquidity. They think they can kind of work those margins, and so I suspect business as usual.
What can you tell us about risk and where it sits right now? Credit risk, financial plumbing and credit angst, I suppose, is what I want to ask you about, Tom, because this has been a theme, certainly in the regional banking sector. It's been a focus, whether this is because of concerns about underwriting standards at some businesses. It's got the market jittery. We seem calmer now. Does that mean it's all gone away? No, definitely hasn't gone away. I mean, I think it was very sort of acute the past few weeks with First Brands, Tricolor. I mean, the interesting thing for me is those people were looking towards private credit as sort of, there's a sign of trouble there. And of course, the private credit industry was pushing back, going, wait a minute, this was a bank underwriting problem. This is sort of a bit rich. You have JP Morgan's Diamond coming out talking about cockroaches when, JP Morgan was one of the banks involved and facing losses with First Brands. But no, I mean, I think there's that general sentiment of unease, I suppose, but these markets, they just keep on bouncing back. So it does sort of feel like whatever gets thrown at the moment, it's just never enough to sort of
break the camel's back.
Tom, great to see you. Thanks for updating us. Bloomberg's Tom Metcalf on what is happening in the banking space right now. We need a catalyst this morning. We need something to kind of get us going, and maybe the earnings picture is going to provide that a little bit later on. You're going to hear from General Motors. Remember, you've seen big write-downs within the auto space recently. We're going to get updates there. Netflix, Texas Instruments are going to be out on deck a little bit later on as well. Around 85% of companies in the S&P reporting results so far, remember there haven't been many, have beaten on profits. Earnings a key driver for the market in the absence of economic data as well in terms of the narrative that we are getting. Val's here to tell us what we can expect.
Look, I think it will be interesting to see what kind of macro things we can pick out from these earnings releases. At least for what is top of mind, I think, for markets is more evidence of a K-shaped economy. We got that clearly from the airlines last week. Let's see if we get that with Coca-Cola today. We also hear from some telcos later in the week, like AT&T, and some leisure and hospitality companies like Hilton also reporting. It'll be interesting to see if they do continue to see this bifurcation between wealthy consumers doing well and the lower-end consumers doing poorly.
Wealthy consumers drink more Coke. Is that kind of how...
Or maybe they pay up for those more expensive probiotic sodas that everyone's drinking these days, right, Guy? I think the other thing that will be of interest is going to be any comments about rare earths. So we do hear today from Texas Instruments, as you mentioned. We also have some defense companies reporting today. Lockheed Martin, RTX, Northrop Grumman also reporting. Remember, rare earths are very key for some of these defense names and some of these defense equipment in particular. We also will be hearing from autos. Autos are heavily used, those magnets that we know that that China's export restrictions could put those supply chains at risk. So any guidance from these companies on how long a squeeze in rare earth supply chain could last for them? I know you guys were just talking just a few moments ago about how Trump wants this rare earth supply to really be juiced by next year. But is that kind of timeline too long for some of these companies? And lastly, just the reflection of beats and misses. As you mentioned, we've had a big majority of companies beating market expectations. If that continues, I think the market will be very quick to assume that this could be kind of a repeat of last earnings cycle, where we saw a lot of companies beating expectations that quickly turned around the narrative from a worry over tariffs and growth to excitement over AI and investment.
You said a lot of really smart things there. I'm still scarred by the probiotic soda. I mean, what even is that?
It makes Val dance, though, so that's great.
That's really the key piece.
They're a big thing in the U.S. these days, guys. Come on, keep up.
There'll be a big thing here soon.
Yeah, exactly.
And then Val will be ahead of the trend. Talk us through some of the worries around the economic growth story. I mean, you laid out a laundry list of them. What else do we need to keep our eye on?
Look, I think Tesla will be interesting in the fact that GDP growth seemed to be supported by those rushing to buy EVs before the EV mandate was relieved earlier this year. Now, if we get some guidance from Tesla that they are expecting a steep drop-off in sales momentum, I think that could point us to the fact that perhaps the juice to that previous quarter GDP could really be down more to, again, consumers bringing up purchases ahead of key events like tariffs. That was very much a focus of Q2. And then the same thing with EVs. Secondly, CapEx and the tech trade. We know that CapEx, at least some people have claimed this investment in AI is really something that's been masking a weaker part of the economy. But we are expected to see CapEx drop off towards the end of the year. That could also be something that could hamper GDP growth. And lastly, I want to throw some curveballs out there. We've seen some quite extraordinary shifts from companies recently. Cleveland-Cliffs being one of them yesterday, a steel maker who has now said that they are going to be looking at their mines for rare earth deposits. The shares flew off the back of that. Yeah. We also heard from Liberty Energy. This is a oil fracking company who also generates power for oil refiners, saying that they're now looking at data centers as a new customer. So any shifts in
buzzwords basically work. Buzzwords work.
Well, these companies, shifting their business model to the AI trade, which includes rare earths.
Or at least their financial statements and disclosures to the market.
And the word counts.
Yes.
I remember when this was happening with crypto, wasn't it? That was a sort of height of lockdown, and everything that had crypto in the title suddenly was
well, we've seen some pretty impressive gains off the back of that, so let's see if that continues.
Yeah.
Valerie, thank you very much. Valerie Titel with the latest on some of those market themes that we are certainly watching. Let's head now to Bloomberg's Tech Summit, taking place here in London. Tom McKenzie, as we saw earlier, is on the ground there for us. Tom.
Anna, it's starting to fill up here. crypto is not going to be a central part of the conversation, but AI sovereignty will be, defense tech will be, and innovations in space as well, and space technology, and what Europe can do to try and reduce its reliance on the US, but also how to implement AI, how to cut through the hype and actually work with enterprise on implementing some of these AI solutions at scale. And that's when we're going to be bringing in the CEO and co-founder of Pigment, one of the fastest growing software AI companies out there, Eléonore Crespo, joining us after the break. Stay with us. This is Bloomberg.
Welcome back to the opening trade. Some breaking news crossing the Bloomberg terminal. Japan's Satsuki Katayama has been appointed the finance minister. This is just hours after Japan got its first female prime minister altogether, really marking a change in not only the leadership of Japan, whose coalition between the LDP and other parties had recently fallen apart. It looks like installing someone who is going to be an interesting choice when it comes to the financial market. Strategists very much split on what she means, given she feels strongly about a strong Japanese yen, but not so strongly about FX intervention. So what do her policies look like, Anna, especially when it comes in contrast or in tandem with the BOJ?
In the moment, the yen still weaker. Was weaker before this announcement, remains so, but just down by 0.2%. Let's put the focus on technology this morning. As we've seen, Tom McKenzie is at the Bloomberg Tech conference that is underway here in London, bringing together some of the top voices in Europe to discuss everything from tech sovereignty to AI regulation, cybersecurity, industrial policy, and all the rest. Tom McKenzie, take it away.
Anna, thank you very much indeed. Very pleased to say we're joined now by the co-founder, the CEO of Pigment, Eléonore Crespo, one of the fastest growing AI software companies in Europe, globally as well. Eléonore, always great to touch base with you. What is growth looking like for you and the team at Pigment right now? Are you seeing the kind of momentum that you saw in 2024? Is that continuing this year?
Yes, absolutely. So I think we'll still grow about 2x this year. Since I think I saw you last time, we kept working with very, very large companies, so leading AI companies in the like of Anthropic, 11 Labs, very large tech companies in the likes of MongoDB, ServiceNow, Uber, and also obviously Fortune 500 and very large companies in the like of EY or BG Wholesale. So
and I should remind our viewers that the software and the solutions you provide in terms of financial planning, forecasting, so you're looking at HR, you're looking at the finance part of the business as well, and this is a solution that is basically the proposition is a cooler and easier to use Excel spreadsheet. Is a simple way of putting it, but you're allowing businesses to better forecast, better predict, and better plan. What is the regional breakdown in terms of growth, Europe versus the US?
Yes, indeed. So the breakdown right now is 60% in the US and the rest in Europe.
60% in the US?
Yes. So this is our biggest market by far. And obviously this has been driven by very high demand because of the macroeconomic environment. You know, business leaders, they know that they cannot wait 3 months to make a decision that has to happen in 3 weeks. And they are very proactive to adopt AI because AI is really enabling them to go faster into every decision they have to make.
And in an environment where some companies and some corporates are seeing slightly tighter budgets, are you seeing anything in terms of a pushback, a more conservative approach to implementing some of these solutions? Any nervousness at this point?
I don't think so. So what we see is that a lot of business leaders, a lot of CEOs are putting very big budgets to actually help their company adopt AI. And they know that they have no choice today but to adapt to a very difficult macroeconomic environment. And they also have to find ways to grow faster and reduce the way they think about their costs and improve their resilience thanks to AI. And this is really where we come and help them as a true business partner.
A big focus at the event today is tech sovereignty for Europe. You take a slightly different approach, or at least you put some question marks around whether that's achievable and whether that should be the aim. How are you thinking about what it means to have tech sovereignty?
Yeah, so for me, tech sovereignty is being very pragmatic about the future of Europe. I think sovereignty for me is all about growth. I think we cannot be consumer, we have to build. And I think for me, the way I think about tech sovereignty in Europe is not so much about protecting yourself, but more growing faster. And I think we have to ship faster, we have to be faster at bringing the right technology in Europe. And this is really what I try to push, working all together, creating the right energy infrastructure, the right talent infrastructure, the right business infrastructure, And what I encourage all of our customers and businesses is to adopt technology faster. If the US is our #1 market today, it's because they adopt our technology faster. I had CEOs buying Pigment in 2 days, where it would perhaps take 6 months in Europe.
Wow, so 6 months versus 2 days in terms of adoption by European clients versus their US counterparts. I mean, that's a huge difference. What are the key roadblocks to you scaling at the pace you want to scale out at this point?
So I think what we see in terms of, I would say, AI adoptions for companies is that it's not so much just about adopting AI. I think every leader right now wants AI in the organization. That's not the question. The question now is more about helping them do change management. Because you cannot just throw AI at everybody and think everybody will adopt AI. You need to rescale your team. You need people to be trained on the new process. You need the right data foundation and the right layers. You need the right governance and the right security. And this is really where we try to help our customers.
When you take a step back and you look at the funding and the deals, particularly around the infrastructure part of the AI story, does it concern you? Does it look like a bubble?
So I think, look, as every revolution, you have to have at some point like this sort of very, very big amount of funding, and it's hard for me to say where that's going to go. I know that at the same time, it is very important to have this type of funding if you really want large market leaders, as we had, for instance, in the cloud revolution, to emerge and to do things very differently. What I know is that AI is a true revolution in the way we are going to work and function as at the world and as a planet. So that's for sure. Now, we will see about the funding. It's hard to tell.
Talk to me about the talent wars. Are you attracting talent from the US? How just red hot is that talent war right now? How much of a challenge is that at this point?
Yeah, so I would say, so first of all, a lot of our go-to-market talents are in the US, definitely. But Europe has an amazing talent pool, especially in terms of AI engineers. And actually, a lot of US companies come to Europe for that reason. So we have an amazing talent pool. But I have to say that now it's a new revolution. And LLM is a new technology. So what is interesting is that this is also reshaping the genetic makeup of companies. And it's not so much about just finding the right AI talent, it's finding people that have the right mindset. It's not so much about the skills, but finding people that are super curious, engineers that are able to adapt, learn the new technology, and really bring it forward, because it's a white page for everybody. Agents didn't exist a year ago. So it's about on us to create that.
What are your fundraising plans for 2026? Do we lose you ultimately to an IPO in the US, Eleanor?
Not yet. I want to stay private for as long as possible. We are a very fast-growing company, so we don't have fundraising plan yet, but we are always thinking about that because we are growing fast and taking market share.
The benefits of staying private are?
Benefits of staying private are innovating faster. We see that with many companies. You take example of Databricks, you take example of Anthropic. They are innovating very, very fast, staying private or Stripe. And so that's really what we want to do for the near future. We want to be able to keep the momentum because innovation is our #1 driver, and it's the only way to win the AI race.
Eléonore Crespo, co-founder, CEO of Pigment. Thank you very much indeed. Guys, back to you.
Tom, great stuff. Fantastic interview. Staying private for longer. That's the takeaway there at the end. So many companies feel that way right now. Tom McKenzie's got a great lineup throughout the day. Stay with us for more from Bloomberg Tech London. Host of top names we are going to be seeing on stage a little bit later on as well. The UK Minister for AI and Online Safety. We've got the CEOs of a whole range of companies. Cloudflare is going to be there. I'm really looking forward to hearing for what that company has to say, Kriti.
Especially in the last 24 hours, given the AWS outage that came and went. Lots going on in the day ahead as well. Earnings, specifically over in the States. General Motors due to report before the bell. After the bell, it's Netflix. We're going to find out about the K-pop Demon Hunters, I believe, is on Guy Johnson's agenda. Plus, plenty of ECB speak as well. We have Christine Lagarde is going to be speaking. We have Nagel, and we have a few others that are going to be hitting the wire.
Something that's caught my eye is the fact that today Andrew Bailey is going to be testifying at the House of Lords Financial Services Regulation Committee. And the reason this is interesting is that we have a story out this morning, and this is what he's going to be talking about. The UK is exploring private credit stress tests as risk worries grow. So the fact that they need more information to assess the risk in what is typically, by design, a more opaque area of the market is really interesting.
Central banks have lost track of where the risk is in this market, and I think that's becoming increasingly clear. The Bank of England feels like it's out in front of this narrative, certainly with the risk warnings that we've been seeing from it over the last few days and weeks. And this fits into that narrative as well. But we learned 07, 08, kind of how the linkages can work. They clearly are concerned about where leverage is and where risk is.
Yes.
And they can't see it at the moment, and they want to know.
Yeah, and the Bank of England being really really honest about the things they got wrong before the financial crisis. Just over the weekend, Andrew Bailey saying over at one of those World Bank meetings that they thought subprime mortgages, until that actually blew up, that it wasn't going to be systemic. And he acknowledges now they got that wrong then. So they really don't want to get things wrong this time.
Don't you think it's really interesting that this is going to come on the same day that the Chancellor of the Exchequer, Rachel Reeves, is going to deliver a speech outlining the fact that she is looking to deregulate? Yes,
that could be an interesting dynamic.
I think what's fascinating here is that the bulls in the private credit space, the Apollos of the world, would argue that the question of systemic stress doesn't exist because it is a private market, and therefore the dominoes. And because we're this early in the democratization stage, no, I completely understand, but the democratization stage isn't far along for it to be a systemic risk. Because we're in the early innings of it, it's still a literally private, isolated
Or do
risk.
those dominoes just take so long to fall? Is that that's the argument?
But where does the money come from in order for this to all happen? Where does the risk lie in terms of the banks? And what about the insurance companies? Where is the risk there? There's all kinds of... you link back into public markets as well. The connection is not completely... There's not a big wall between these two markets. There are interplays between them.
Yeah, the blurring of the lines between the two seems to be in focus. That was certainly what we heard from JP Morgan, Jamie Dimon talking about that. And, of course, they've had to pay out money as a result of some of those linkages between the private and the public markets.
Absolutely. What are we going to be doing next? The Pulse is coming up. Anna's going to be doing some of it. I'm going to be doing some of it. I think we're going to be certainly.
Actually, I think it's Fran from the tech show.
Fran's going to be at the tech show doing it, but we're going to be. We're not going anywhere.
We're just here in case.
We're going to sit here and make sure that doesn't happen. Look, I think the really interesting thing about today is that we are definitely looking for a catalyst. We're trying to figure out exactly what's going to be happening a little bit later on. Pay attention to what is happening in the crypto market today. Generally, equities are going nowhere. Volume is not particularly substantial today. I think we're looking for the next catalyst. Are we going to have to wait until the back end of this week until we see the CPI data being delivered out of the United States? Or are earnings going to provide that catalyst for us a little bit later on? But it feels at the moment as if European markets are very much sitting on their hands, waiting for that next catalyst to arrive. When it does, Bloomberg Television will be here to explain it all, we hope. Anyway, the Pulse is up next from the Tech Show. This is Bloomberg.